rational demand from the soybean jab, that's the issue we are going to discuss first, and several other issues with Mike Zuzolo in our All About Commodities segment on Connected Farmer, your channel to keep you up to date with the latest trend in agriculture and livestock. Mike, how are you today?
Doing well, Luis. Thank you. I had a small road trip this week and was able to see some of the corn crop up here in the United States. So I got back from that late last night. So thanks for doing this.
Yes, how are the fields in Missouri?
Uh, about as expected. You know, you and I have talked a lot about how different the Western Corn Belt west of the Mississippi River is versus the Eastern Corn Belt because of the hotter, drier weather in the West. And that was sure showing up in Western Illinois and throughout the state of Missouri and Eastern Kansas. Those are the three states I touched into, drove all the way through the state of Missouri. But corn is very brown. It looks like mid-October up here in the state of Missouri and Kansas for the corn. That's how brown it is. No green at all, and the tops of the plants are actually black and dying. So I think we probably shaved some yield in the Western Corn Belt areas that I drove. But by and large, I think my yield expectations of being closer to a 175, 176 national yield as far as maybe the top end. I think I felt good about that once I came back. I didn't check any fields though, because I was picking up some temperature sensitive commodities. In other words, I was picking up some pork from a hog client in Indiana.
Yes, and from to the point where we started, what can you say about the soybean market right now?
Well, I don't think we're rationing yet. I mean, I think the trade is trying to get to the rationing stage, but I don't think we can really know if we're rationing until we get a better handle on the next USDA yield report on the supply side. And I think that's the one that is probably the biggest question mark as far as how much is supply falling. Now, if you looked at rationing from the demand side, I do think we're starting to find that at this stage of the game. If you take away as a factor the currency markets, it was pretty important this week to see that the Brazilian real was able to, it's up 8% in the last 5 weeks, and the Chinese yuan is at its strongest level since May of 2019. If you take that away though, Luis, I think the negative soy meal export sales that we saw in the weekly numbers this week, coupled with late week news breaking that China was reselling Brazilian beans that they had purchased from Brazil and were replacing those with U.S. beans, arbitraging about a $250,000 U.S. Profit per cargo is what the news reports were. So it looks to me that China is not going to need these beans. They're actually re-exporting them out into the market, probably taking away from future demand from other Asian countries that maybe we would sell to, or that Europe would sell to, or Brazil would sell to. So I think on the demand side, we are rationing at this point, but we can't put it all the way together yet because we're unsure of the supply still.
Yeah, to give you an idea about how much soybeans Brazil sold this season, it is the current crop is about 98% sold, and the following crop is about 60% sold. So I don't think Brazil is going to sell much further in the next couple of months. And also, Brazil is expecting a record crop, but as we comment on other shows, CONEP always brings maybe an exaggerated number at the early days.
Yes, and I think the other thing to mention here on our Connected Farmer programs at this stage is that we've talked about the drought in Argentina, but I think there is an element of drought coming in Brazil. And I've had a lot of clients tell me asked me, I should say, whether it was time to start selling 2021 crop. And while I want to start selling 2021 crop when we get to $10 futures on the November deferred contract, I don't think it's time yet, because it looks as though Brazil is going to be staying very dry through the rest of September, both on the model maps I look at and some of the professional information that I buy. And so I think we have the makings of continued supply issues in Brazil if they stay dry through planting. That naturally kind of answers the question you and I have been batting back and forth as to whether China will cancel U.S. soybeans. They'll have less likelihood to if the Brazilian crop going into planting and after planting is as dry as it is right now, or the Argentine crop and the Brazilian crop as it is right now. So do you see that same thing happening with the dryness in Brazil?
Yes, the southern parts of Brazil have consistent droughts a lot more often than in the central areas like Mato Grosso, and this year that could happen again.
Yeah, I was looking at some maps like Santa Catarina and Mato Grosso do Sul. It seems as though they've gotten maybe 25% of their normal precipitation over the last 30 or 45 days.
Yes. And how are you seeing now soybeans well below $10? We spoke about this possibility in previous shows, and do you think that will be consistent? It will remain for a while?
Yes, I think one thing that happened this week that's very important for your viewers is that we talk about wheat being a leader in the commodity markets when it comes to funds and investment and maybe inflationary buying taking place. Believe it or not, the soft red wheat futures market in Chicago this week was up 8%. The hard red wheat futures was up 7%. That compares to a soybean rally of 4%. So you can say very definitively, at least this week, the wheat market came in and took over as the leader to the upside. That's very important, in my opinion, as far as sustaining prices in the soybeans at this price level until we know more of what's happening on the supply side for the soybeans. Now, I will point out on a monthly chart basis, we have not seen a monthly close above 1045 lead month soybeans since I believe it was June of 2016. We have not been above 1045 in lead month soybeans on a monthly basis since June of 2016. So we're getting up in pretty high price levels. I'm not saying that it won't go higher, but what I'm saying is there's probably some congestion and some friction here, and we need the wheat more than ever. I think we don't talk about corn as much or maize as much as maybe we should, but I think the real story is in the maize market. I was shocked to see that the Chinese maize futures price lead month is an equivalent of $9.18 a bushel at the end of this week. That compares to $3.76 here at the Mercantile Exchange. I think there's something going on in China with the domestic issue of corn, where they are going to need to import quite a few million metric tons.
So what are you suggesting for the corn grower right now?
Well, we have been able to see some yields come off the fields. They're mixed. They're very, very good in some areas that you would expect them to be. They're not good in other areas. And I'll give you an example. A central Illinois producer who was able to receive very good rains, very timely rains, is shelling 240 bushel corn right now. If you move across the state to about the same area of Indiana, a producer that irrigates corn is running 40 bushels to the acre below his 10-year average, even with irrigation. So I think the corn yields are much more mixed. And so I'm a lot more, between that and the futures price and what's going on in China, I'm a lot more slow to make hedge or sale recommendations on the corn. And I'm really focusing on finishing up the 2020 soybeans. I'm about 50% sold on cash beans for 2020. And I've got the other 50% covered with January puts. So I need to do some work on moving those puts over to cash sales this next 30 days.
And what about the just announced 14 billion package for U.S. farmers?
Yes, I was actually talking to a University of Illinois person before we came on air, and he supplied me with some pretty interesting data. We're calling that CFAP2. and that's the name that we're calling it up here. But that $14 billion, roughly speaking, to an Illinois producer, and this is University of Illinois numbers, and it's very generic. It's not meant to be used. But they were thinking that if you were a 200 bushel corn producer, you were probably going to get about $45 an acre. If you combined about 60 bushels on soybeans, you were going to get about $16 or $17 an acre. Luis, I think between that and some of these other crop insurance payments that are coming, and then this recent rally, I think producers, what they haven't sold, that gives them extra staying power to keep themselves tight-fisted with whatever they have left. It's not unlike, I think, what you're seeing in Argentina. I was hearing, and I wanted to ask you about this, I was hearing that Argentine farmers are essentially using their crops as dollars and holding
Yes.
tight onto their supplies because they're playing the dollar market right now.
Yes, that is typical from the Argentinian farmer to use their grain or the oilseed as currency.
Are you seeing that more than normal though? Is what I guess I was wondering.
Yes, Argentina is very unstable right now.
Well, and
So
that factors into the prices too. At some point, you're going to go high enough where you're going to get the Argentine farmer and the U.S. farmer to let go of their supplies. We have a very important report coming up next week, the grain stocks report. It's a quarterly report, and it'll tell us both what we have in on-farm storage and what we have in commercial storage. I think that's going to be one of the more important reports of the last 5 years.
actually, with more and more tough restrictions on currency in Argentina, there is going to be a repeat an issue from old days from the Kirchner administration that there will be smuggled soybeans.
Will this affect their planting decisions, or will they just bank on the idea that agriculture will continue to be supported by the government?
I think some crops, it, depending on the profitability, will reduce the surface, and some will get in some sort of black market.
I see.
Because in the past it was very usual that Argentinian soybeans were declared as Paraguayan soybeans as they use the same waterway and they were exported as Paraguayan beans. And so
Interesting.
that was the one crazy thing that is going to repeat.
Hmm.
So how are you seeing the overall economy? Some data is saying that the payrolls are stable at the same level, and but airlines have seen more sales recently.
Yes, I think you're probably leveling off, but not improving to pre-COVID levels yet. I thought the Federal Reserve did an exceptionally good job this past week with both their press conference and their information that they gave out. And essentially they're saying we see a better economy, we see a better employment situation than we saw just a month or two ago, but that was highly dependent upon more fiscal stimulus from Congress. And so if the US Congress and the Trump administration continue to move in a negative mindset with one another going into the election, we probably will slide back. And so my demand concerns remain very elevated at this point, Luis, especially given we got good news on one hand that one of the major college football conferences, the Big Ten, was coming back to play, but we don't know if they're going to have anybody in the stadiums. And so where's that meat demand going to come from if you don't have anybody tailgating and if you don't have anybody in the stadiums? So I'm very nervous about the demand still, and that's all revolving around the election. It's just like the U.S.-China trade negotiations and their overall political relationship right now before the elections. It's very tenuous, and I think the volatility is going to get worse and worse and worse.
And on these trends related to COVID, do you see more people migrating to the Midwest because a lot of people have left or large cities like New York?
Yes, and it's not just COVID. Before COVID struck, it was already starting to be that way because New York and California were taxing people too much, especially the middle class people. They were getting taxed way too much. So we have had several people from the West and the East move into our little local community here in Atchison. I have a very good new friend that moved not far from Portland, Oregon, about 6 months ago. And he brought his family and brought his business here to Atchison, Kansas, because it is the middle of the country. And while our taxes are not the lowest in the Midwest, it seems like a much more stable fiscal environment. And now with the COVID, maybe a little bit more stable in terms of individual freedoms and rights, and not as dense population areas other than like Kansas City.
And that is positive for farmers, I guess.
I think it is. I think it helps the local economy because it diversifies it. And you also have, I think, a relationship that you're building with people that are in business and the agriculture sector as well. But we've seen several new families come in the last couple of years. Part of it is because of the college here, but I think part of it is COVID and tax related especially.
I wanted to have your word also about the beef sector. In Brazil, there are skyrocketing prices, as I mentioned in other episodes. How do you see the market evolving in the U.S.?
Yeah, I think the beef sector continues to be led by the pork sector, Luis, because the pork sector is the bright spot in the demand market. I am seeing prices here domestically come down, and they're coming down nicely. I was at the first time in probably 6 months, I was able to buy Kansas City strip steaks for $7.99 a pound. They've been double that here during the COVID time period. That tells me that we're starting to slaughter more cattle, and we're starting to get more of our marketings back up at the supply end of the supply chain, and it's getting into the stores a lot more quickly. So that's good news, but I still think that we're going to be heavily reliant in the beef sector on what the pork sector does. But that's not bad because the weekly pork export sales were another very strong week. And it looks as though with the German African swine fever, we're still in kind of what you would call a pole position or a leadership position, given our weaker dollar. I mean, keep in mind, like I said, that Chinese currency is at the lowest price since May of 2019, or the best price since May of 2019. So China's buying power has been going up, up, and up against the US dollar. So I think they'll continue to buy our pork, and I think that will only take pressure off of the beef sector and keep maybe the funds from wanting to sell it so dramatically.
And any other thing to comment, Mike?
The only thing I would say is what we just talked about, and trying to combine that with what's happening economically. If I can get another move up in the cattle and in the feeder cattle, I want to get some floors underneath me in the fourth quarter in case we have a bad election or in case something happens between the U.S. and China.
Mike,
Thank you, Louise. Have a good week.